Hi, I'm Shane Balkham, Client Investment Director at US Asset Management. Welcome to my 2-minute missive. We're halfway through the second quarter and almost halfway through the year. It seems to have gone incredibly quickly, which, considering the volatility of the markets and the market headlines, probably doesn't come to much of a surprise. Most of those headlines of volatility can be put at the feet of President Trump's tariff policies. And we had a bit of good news last week regarding those, with Washington and Beijing agreeing to a new deal. Well, not really a new deal. They've really put it on hold for 90 more days. And with any of these, it's the details that need to be thrashed out. And it's not just the US-China, it's going to be the majority of these tariff agreements. That good news did buoy markets. US market was up last week, also on the back of some subdued inflation figure, 2.3% for April. Now, it wasn't all good news for the US. Over the weekend, Moody's, a credit rating agency, downgraded the US from AAA to AA1. Now, that was on the back of growing trade deficits and Trump pushing for a tax cuts with no real budget cover to it, really. So you could be forgiven that the second half of Q2, maybe the second half of 2025, may also be about the US, but it's more than that. Year to date, in equities, we have UK, Europe, Japan, the emerging markets, all in positive territory. Demonstrates that even though the US is taking all the headlines, it's really important to have a diversified portfolio geographically and with different multi-assets as well. And on top of that, the importance of staying invested. These views are my own, and before you make any investment decisions, please speak to your financial planner. Thank you.